how will you afford that second or third investment property? Well, today you're going to hear about mortgage rate strategies for 2019. Stay tuned. It's the Austin Real Estate Insider, where we tackle all the issues that buyers and sellers in Austin are encountering. Hi, my name's Sunny Tracy, and today we're going to talk about mortgage rates in Austin. As always, be sure to like this video if you're watching on Facebook. If you found this helpful, comment home below, and to subscribe to future broadcasts. If you're watching us on YouTube, make sure you like and subscribe as well. And as always, if you have topics or questions, add them in the comments below. Today, I'm joined by John McCarthy. He's our sales manager here at Spyglass Realty. And I'm also joined by Max Lehman of the Lehman team. And we're going to be talking about mortgage rates in 2019. Here's what we're going to go over. Interest rates, of course, and how they changed from 2018 and where we think they're going in 2019. What do interest rates mean for you as a home buyer or seller, and how to find the best mortgage rates. So Max is the #1 volume producing lender in Austin and also in Texas. He's kind of our go-to lender here at Spyglass Realty. We work with him a lot. His processing team is amazing. So let us know if you ever need anything from Max. But he helps borrowers here in Austin and through the U.S. He's been doing it since 2001. So Max, the first thing we want to ask you about, just to kind of tackle a current events issue, is the government shutdown. Has that had any effect on mortgage processing?
Really not. First off, thanks for having me here. I appreciate you guys. Yeah, the shutdown, there was a lot of nervous Nellies, if you will, in the beginning. You couldn't get flood insurance. We couldn't get our IRS transcripts for tax returns. And people thought that was going to be a big issue. The IRS is open for transcripts. We're able to bind flood insurance again. So there's really nothing that's holding us back. USDA loans are, you're not able to close those right now. But that's really the only thing. So for all of us, it's really just
business as usual.
These freeze there? Business as usual. Well, I had another question for him, but we'll have to wait for him to come back.
Hear me? Can you see me?
Hey, there you are.
Yeah, there you are. Okay.
There you go.
Great. We lost you for just a second.
Sorry about that. Yeah, so it's business as usual, and really there's no negative impact from this other than USDA. So
great.
Nothing really for people to be concerned about.
Great to hear.
Yeah. So that we hear things in the media and interest rates are rising and affordability. We hear those things, and the Fed's raise interest rates, increase in the first half, decrease in the second half. I mean, every year there's projections, and I think interest rates may have ended lower last year than what was projected. Is that true? And then this year, so what do you expect to happen this year?
Yeah, so really about the beginning of December, we started seeing rates. And into that year, we've seen the kind of the same trend for the most part, with all the volatility in the stock market and all the uncertainty with trade wars and everything else. We've seen a really positive result for rates. So last year we were thinking rates could be 5.5, maybe higher this year. We're seeing a lot of revised forecasts. Fannie Mae's thinking they'll end up around 4.875. Freddie's saying maybe 5 1/8, 5 1/4. Right now today we're about 4.5, which is down quite a bit. There were days last year where we were. So it's really, I think, since the beginning of the year, we all feel we're going to end up at 5.5. So it's still a really good time to get in.
Yeah. So what does that mean? Like if they raise rates a quarter point for someone that's looking at a house that's around 300,000 or even a house that's around 600,000, if they raise half a point or a quarter point, how's that going to affect someone's mortgage payment?
Well, so number one, it's important to know that when the Fed raises the rate, that doesn't have a direct impact on mortgage rates. So when the Fed comes through and raises rates a quarter of a point, mortgage rates are not going up a quarter of a point. Most of the time, bond pricing, which is what mortgage rates are derived from, have already kind of factored in what the Fed's going to do. So as long as the Fed kind of falls in line with what expectations are, you really don't see much of an impact on mortgage rates. If the Fed came through and we thought that, at this meeting they're not going to raise rates, and then all of a sudden they raise rates a quarter of a point, that's not really good. But these last couple of rounds, they raised the rate, but it was expected that they would. So that was already kind of priced into the market. For example, on a $600,000 loan, at a 4 3/4 rate, your principal and interest payment is $2,503. At a rate, it's $432. So you're looking, about $70 or so.
That was
for a quarter point.
$70 for a quarter point. Okay.
Yeah, and that's on a $480,000 loan amount.
Yeah.
On a, if you're buying a house that's $450 at 20%, 20% down is $360. So at 4 3/4, you're at $1,877, and at 4 1/2, you're at $1,824. So it's about $55 there.
Okay, so that's not too scary, but
no.
If there's other things factored in there, like HOA, insurance.
Well, tax. Yeah, and those are just principal and interest payments. Taxes and insurance are always going to be in addition to that. Tax rate in Austin's about. Insurance, a good rule of thumb on that is if you use like 0.45% of the sales price, that's a good kind of rough estimate for your annual premium on insurance. They do think that rates are going to go up some this year. So definitely better to get in sooner than later. But, if you're waiting until the summer or the end of the year and rates are up a quarter, 3/8 of a point, it's not the end of the world.
Yeah. Well, that sounds like real good news for our spring season we're about to get into. Sounds like interest rates aren't really going to price anybody out of the market in the next few months. So should play right in line with, all of the peak of the market that we're going to see in the next, 6 months. From now to then.
I think so. And, we've definitely seen an uptick in loan applications since the beginning of the year. And just in talking with other lenders and real estate agents, that kind of seems to be the trend for everybody. So, we could maybe see more activity this year.
More? Wow, that'd be great. Let's see. Well, Max, that's really the biggest two questions we had. I'm sure there might be some other things on your side, even like nationally or locally. Is there anything else that you think is real important for our viewers to hear?
Don't let the market scare you. Don't be afraid of a quarter, a half a point change in rate. It's just. And also, it's important to really look at your overall payment. A lot of times, I think people can get hung up on an eighth of a point here or there. And when you're looking at $20, $25, $30, it's just not that much money. So I try to keep stuff like that in perspective.
Yeah.
When you're shopping rates, one of the big things, especially because you see all sorts of stuff on the internet, it's not just about the interest rate, but it's about rate and fees. What is this interest rate costing, right? You might see a 4% rate at some point for a 30-year fixed, but there's going to be a cost associated with that. So it's important. It's important that buyers are working with a loan officer that's going to help them figure out what's their break-even point. Is it smart to buy the rate down and pay these extra fees, or is it not? So it's not just about getting lowest rate.
Yeah. Okay. That's interesting. And that's great to hear, kind of like layman's terms, an eighth of a point or a quarter of a point. I actually have a client right now who you guys are working with on a new home build, and we can't lock them in on their rate because we're like 90 days from closing. We had the conversation yesterday. She was kind of scared about where her payment might lie or fall in 30 days when we actually lock in the rate. But even if it adjusts for a quarter of a point, for her, it's no big deal. Which eliminates a lot of that the hesitation to go ahead and contract on buying a new home. So again, now's the time.
Yeah, absolutely.
Yeah, it's great. Okay. So let's see. Sonia, do you have any other questions for Max and Lehman team?
I don't think so.
No. Do we have any questions that came in on our board? Just a lot of love from our supporters over there.
Yeah.
Cool. Nice. Well, I guess we'll wrap it up, right? So don't forget, if you like this video and you're watching Facebook, if you found this helpful, to be sure to comment home in the comments below and subscribe to see our future broadcasts. And catching this on YouTube, that's great. Like us and subscribe to our YouTube channel. And also, if you have any topics or questions that you'd like to cover, comment in here and we'll get that on our Run a Show for one of our future shows. And bring
we have a really great schedule lined up for the rest of the spring as far as shows. So make sure you stay tuned.
Great. Yeah. So put those questions in there. We can try to answer those on some of our next shows. Great. All right, Max. Well, thanks for your time today, man. Appreciate it.
Yeah. Thanks for having me, guys. I appreciate it.
You're welcome. All right.
Bye. Thank you.